All right, we're now at 9:05, so we'll go ahead and get started. Again, welcome to Plaid's FinTech 2022 predictions. We're so happy to have you all here today. My name is Ginger Baker, and I am the head of financial access here at Plaid. I've been at the company for about 18 months. This is my second FinTech predictions activity. Zach and I did one last year. They're always fun and they're always exciting. We also really appreciate the engagement from you all. So please, as you have questions, please post those in the chat and hopefully we'll get to them at the end. Before we get started, I'm just going to pass it over to my colleagues to introduce themselves.
Hey, John Pitts. I am the head of policy for Plaid. If there is a betting pool on who is likely to say the most words with the least content, I'm probably your safe money on it. This is my first predictions, and I can't wait to join.
Hi, everyone. I'm Zach Perret, co-founder, CEO of Plaid. I think this is something like my fifth FinTech predictions, which the first one was actually me on an airplane flying back from visiting my, at the time, fiance, now in-laws, to actually come back to San Francisco, wrote these on a plane, tweeted them out. Turns out it was a hit. So we have now been doing this for about 5 years, and I'm so happy to talk with you all today.
And for those of you who joined us last year, Zach and I had a casual chat about some of the things that he saw on the horizon for 2021. But for those of you who don't know Plaid too well yet, we do like to have a lot of fun here. So we thought we would change the format around a bit this time and have a little bit of a game show style format. So Zach has a list of his predictions that he's going to share, but in true and honest form with the way that the days progress here at Plaid, John and I will be providing our opinion about what Zach is saying and perhaps not always agreeing with his foresight and predictions. So over the course of the next 30 minutes or so, John and I are going to be sharing our hot takes on Zach's predictions. And then again, as a reminder, we will have some Q&A at the end, so don't forget to drop your questions into the Q&A widget at the bottom there. Okay, so to get us started, Zach, can you please help us understand your predictions for 2022?
Absolutely. So for 2022, we have 6 predictions. We're actually going to flip each one of them up as a slide. I'll give a little bit of context on what's going on. John and Ginger will tell me where they agree, disagree, or think that I'm totally off base and want to talk about something different. So we'll make it a little bit more fun. Kicking off, can we jump to the first slide? So the first slide is in focus, or the first prediction is focused on this continued trend of unbundling, which if you think back to how financial services was delivered, call it 10, 15 years ago, every single product that a consumer might need in their financial life was delivered to them by their local bank branch. And it was a fully bundled solution. Then fast forward to digital finance, we unbundled a lot of that. The industry unbundled a lot of that. You can think about delivering a very atomic user peer-to-peer payment experience where companies like Venmo came up to just do peer-to-peer, as opposed to having that all delivered to them by the bank and oftentimes having to use cash. And that allowed Venmo to build a truly differentiated product, something that was way better for many, many consumers, grow really quickly. Now we're seeing rebundling. So if you look at applications like Robinhood, for example, they're starting to add more and more products and features for their user base. But a few of the trends that we've seen kind of embedded in this, first is this concept of going from geographic-based bundles to demographic-based rebundles. So Robinhood is going to build things for their user base, for their like deeply engaged consumers, as opposed to having to serve everyone in, say, a local community where they might have vastly different needs. So we're seeing a huge kind of focus on this rebundling around demographics. And the second thing is that we're seeing, some rebundling, but then kind of what I would call clubbing of apps. So consumers are now using 1, 2, 3 applications frequently in parallel to live their financial lives. So whether that's rebundling within a given application or rebundling within, call it a group of applications, we're starting to see more and more of this come up. So with that, I'm going to hand this off to Ginger and John. What do you think? Rebundling, unbundling, which direction are we going in?
All right, well, I've got 2 green thumbs here, and not just because I spend my weekends farming in West Virginia. So I'm going to go first and say, I think this is absolutely spot on prediction. And more importantly, I think there's going to be an immense amount of regulator and policymaker support for that rebundle as it happens. Let me sort of get a little bit more detailed on what I mean there. So we've seen in the last year a fairly tectonic shift in banks moving away from overdraft fees. The reason I think that's important to your unbundle rebundle is at the same time, banks are starting to adopt bank-based buy now, pay later, right? So what we're seeing is this communication between fintech and traditional FI, where as groups like Chime figure out how to have a viable market strategy without depending on overdraft income, they've created this sort of consumer draw that is inexorable, right? This is the type of product I want. And it's not just monoline. It is a full stack of experiences that's not dependent on me being a revenue source through a product that I find, unpleasant or predatory. So the FI reaction is we need to drop those products ourselves. We need to figure out a new bundle that matches that fintech bundle, or that is sort of our own sauce version of it. You see the adoption of BNPL by banks. I think that is part of sort of the first wave of this. What from this new fintech bundle can we start adopting? And I think you're going to see more and more of this communication back and forth between traditional FI and fintech. The really interesting thing is going to be, what does that do to sort of your profit pool as a company? Right? There's a ton of cross-subsidization in financial services. Regulators look for that cross-subsidization as actually a good thing for safety and soundness. And I think there's going to be a lot of questions of, if you depended on this for material revenue, if you've treated an account as a loss leader for other services, can you survive in this rebundle? And what of the best features can you borrow from other companies to really sort of have a package that takes you into the digital 21st century? So very strong yes on this one, Zach.
So I was a yes and a no. I think in general, I'm probably more of a yes, but I wanted to add a thumb down in there just because I want to shift the context of the commentary a little bit. I don't necessarily disagree with what John and Zach are saying about bundling, but I want to put it more in the user's terms. I don't think people are going to be thinking too much about whether or not their services are bundled or unbundled. I think people are going to be thinking, am I getting through the experience that I want to get through? Financial services is going to be successful in 2022 when we embed the capabilities and the functionality into the experience the person is already in. So the customer isn't going to be thinking about, is my service provider bundling or unbundling behind the scenes? They're going to say, I'm in an experience. I want to buy a movie. I want to buy a car. I want to get to the next thing. And am I facilitated in the right way to do that? And so my kids ordered, a movie on Amazon this week. Like, I think I know what payment type is like linked to my Amazon account, but I don't think about it that way. I think about it as, did I get the movie on Amazon? And so I think in 2022, we might, as the industry, talk about bundling and unbundling, but I want to kind of shift it a little bit and say, what do consumers care about? And I just think they care about finishing the experience and satisfying the emotional driver that they're in the midst of.
All right, well, that's great. Ginger, I'm going to put a pin in that comment that you made on your Amazon wallet usage. We'll come back to that in just a couple minutes. Jumping into the next prediction. We have unbundling and rebundling. We have consumers using lots of different things. But my prediction is that over the next 12 months, we're going to see a rise of the Neo Super app. So again, going back to what a bank in person in a branch used to be, you had a kind of all of the fintech things in one place. All of the financial services things, all the banking things in one place for a consumer, and the bank could kind of market a lot of stuff from that branch channel. Now, fast forward to where consumers are engaging today. My prediction is that within kind of each of the relevant spaces, so within, call it lending, within brokerage, within banking, there'll be one or two or maybe three kind of super apps, or like the largest 1, 2, or 3 applications that are there will really emerge as these true super apps, adding every bit of functionality within financial services. They'll have a lot of success there. And I predict that over time, they'll actually be able to add in things that are above and beyond financial services. So one easy example is SoFi, where they are kind of really emerging in the lending category. They've built investing, they've built kind of banking, they've built all these other things, and they're actually doing a lot of things for their members that are well outside of financial services. And so you're seeing them kind of emerge as this style of super app. not specific to SoFi itself, but looking across each of these segments, how do you all feel? Neo super apps, do we think this is going to be a thing? Do we think that kind of these financial services players are going to be able to rebundle everything and for some users and then go potentially even beyond financial services? All right, good. Well, we have some debate here. Ginger, I think you're first this time.
Yeah, so I'll start. So, I mean, I'm going to use my very scientific case study of one here, because I myself am beginning to use, 2 to 3 major apps that I would deem as like kind of super apps in my life. I've given away one of them already, which is Amazon. Amazon sort of permeated across a lot of different experiences that I have right now. And for whatever reason and however I've set it up, the payment and transactional experience happens in the background without me really realizing it. So I would say in terms of shopping and commerce, Amazon has sort of occupied that space in my own life. And I have friends who have other types of apps, whether or not it's Apple or whether or not it's a combination of Meta's surfaces that occupy a similar kind of role in their lives. And so in that case, it is, one provider providing a lot of different types of experiences. And then again, selfishly for me, I use, I guess, what do we call them now? Block, Cash App for, all of my sending and sort of social payments. I use Charles Schwab for everything associated with savings and investing. So I sort of have 2 or 3 apps that I would consider kind of super apps in my life that play a diverse role and help me to satisfy all the things that I want to do. And I don't think it's just me. I think now 70% of consumers are saying that fintech is and these kind of digital financial services are a part of their daily conversations. And I think it's because of the relevance and the way that these super apps have become so important to people's lives is why it's now a part of daily talk. But I'm very eager to hear what John's going to say. I think he's going to say that big is bad in the New World Order because he's going to come from the policy stance. But John, why do you disagree?
Yeah, wait, John, before we get there, how did you get 4 thumbs? How do you have 4 thumbs now? You only have 2.
Believe it or not, I purchased a box of 25 from Amazon, which is one of my super apps. My superpower on Amazon is not reading the unit count before I order something. I just look at the price, and sometimes I end up with slightly more than I need. But this is a 4 thumbs down for me, so I'm glad I had the extras. Actually, if I had the Jim Cramer squawk box, I would be like hitting all of the awful noises right now. Because Ginger, I completely agree with you that from a consumer and from a market perspective, Zach is right. The rise of the super app is inevitable. However, we are going through a deep, deep structural change of antitrust law. This, by the way, if you've ever wondered how to have the most popular job at Plaid or at any emerging company, definitely be the policy guy in the room saying, yeah, but the government says no. And I think we are in a yeah, but the government says no moment here with new leadership at the Federal Trade Commission, new antitrust leadership at DOJ, new fairly antitrust leadership at the Consumer Financial Protection Bureau. I think we are in a moment where, yes, Ginger, big is bad. And that doesn't mean that there won't be an increasing rise in super app-like structures, but I think there is, for the next several years, going to be a real hard ceiling on that, where regulators grow concerned that undue concentration, even if it is good for the consumer, and I think this will be really, really good for the consumer, creates structural problems that are too concerning to ignore. And I think that's going to create some serious headwinds that are never going to get us to sort of the super app level that I at least think of when I think about what's happening in China, which I would view as sort of the market leader of the super app approach to financial services. So I think there's a ceiling that's lower than this prediction takes into account. And we may really start seeing those headwinds even in the fintech space sometime this year.
Okay, well, we will have to look at the end of the year and see which one of us is right. Just a really quick reminder to everyone in the audience, if you want to ask follow-up questions, if you want to put things into, if you want us to answer other things that we haven't talked about yet, feel free to drop questions into the Q&A. We're going to have some time at the end. We'll come back and grab them, or as many as we can, and try to answer them. But with that, I'm going to move to number 3. Which for the participants, I actually changed in the last 10 minutes before we did this presentation. So you're going to get John and Ginger really on the spot in the hot seat here. But jumping to the next prediction, it's focused on new payment types are going to achieve critical mass. What do I mean when I'm talking about new payment types? Well, let me be a little bit more specific. So we are seeing a really substantial emergence of wallet-linked payments across almost every one of the major tech platforms. So we talked a little bit earlier about the Amazon kind of connected wallet, where you have a bunch of payment types connected into Amazon. Google has a similar style wallet. Facebook has a similar style wallet and is continuing to invest behind that. For those of you that use Shopify or ShopPay, you'll see that that is a connected wallet. All of that right now, all of those right now are mostly wallets that don't have stored value in the middle, that aren't doing a whole lot above executing that transaction. But I predict that kind of in the coming 12 months, they're going to do things like actually hold balance there. They're going to do things like actually be more of a financial services provider, so that it's not a kind of direct from your bank account or from your credit card to the merchant. It's actually has a hitch in the middle. So these wallets are going to emerge. As a corollary to that, we're also seeing, especially driven by a lot of the changes in Europe, an emergence of direct bank linked payments. So my prediction is that we see kind of new payment types for the first time in quite a long time start to really take hold in 2022. All right, who's first on this one? I think John, you're first on this one. Oh, Jay, yeah, you have to make your prediction. Oh, there we go. Turns out you agree with me on something.
We both do, which hopefully doesn't make this too boring. So we have not talked about Europe yet. And I like Encanto, we don't talk about Europe enough. No. And yes, I have small children. And sorry for those of you who now have that stuck in your head. But Europe right now is experimenting with VRP, variable recurring payments. And I think that's one of the keys that is really going to unlock, Zach, that flood of new payment tech and new payment use cases there, because it allows that fundamental embedding, right, in those wallets, in any payments use cases where you can build it into the product. And the fact that the consumer is using DoorDash and their price changes every time, they can still have a seamless payment experience. And if you look at sort of, right now you've got great tweets. It almost feels like a daily tweet where someone is tweeting out a checkout experience where they've got an additional payment option in that checkout experience, including checkout as one of the options in the payment experience. That started in Europe first. And I think Europe is a real bellwether for the US on where that is going. The big gap right now is in the US, we don't have really deep formal access to the bank payment rails for fintechs. But even despite that, you've seen everyone figuring out new ways to use the card rails, the ACH rails. FedNow is, fed soon and is always going to be fed soon until it happens. But that's going to create even more options. You're going to have, I think, this explosion, almost a Cambrian explosion of new payments use cases, and critically, a deeper embedding of that payments process and payment options into literally everything you do, as long as you're not doing it on a super app, because those aren't happening.
Okay, well, I disagree on the last thing John said, but I agree on the first stuff. I'm not sure I have too much more to add here, other than just to say that I think the variation in the types of methods that can be used is really going to be dictated by where the consumer is in their actual journey. Like, where is the buyer? What kind of access do they have to on-ramps and off-ramps for actual physical currency into digital currency and potentially into crypto, so fiat to crypto? And then how that experience is going to satisfy things along conversion, cost, and user experience. And so I think folks who are developing these experiences are going to be looking at how to balance those three things. And just having more variety and diversity in the kinds of tools that we can use to satisfy those three things is going to lead to a better 2022.
All right, John. Well, you might have coined a new term there. If you remember back to the beginnings of fintech, there was the Cambrian explosion, that original thesis of new fintech products. Maybe you've coined a new term on Cambrian explosion of new payment types. All right, jumping to the next prediction. This one's focused on real-time credit decisioning. One of the things that we talk about at Plaid is that platform shifts kind of throughout the history of the internet, and kind of how things like the emergence of obviously the internet first, but then since then things like mobile, things like any of the other kind of things like social, any of the other major platform shifts that enabled new portions of the industry or major new changes in the industry. One of the ones that we talk about a lot is this confluence of kind of better data processing, better machine learning, frankly, a lot of the features that cloud enables to create a true real-time credit decisioning model, such that on a consumer's device, you can train a model well enough that it can make a decision in real time or quasi real time, something that seems real time to the consumer. And we expect that this is going to kind of over the coming 12 months really revolutionize the way that consumer credit is issued. You've already seen this in the emergence of things like buy now, pay later. But I expect that this is going to kind of like fully change a lot more about consumer credit. John Ginger, how do you think about this?
So I think you're seeing overwhelming support for this prediction, Zach. I'll kick this one off. So first, I think this is just long overdue. We've seen the emergence of using non-traditional sources of data for credit scoring in other markets around the world for years, and like we've just been catching up in the United States, honestly. Like for example, Tala launched in Kenya, I think in 2014. And just with a totally fresh way of looking at creditworthiness for folks that didn't have traditional files. So they were looking at customers' text messages, call logs, merchant transactions, overall app usage to really build successful credit profiles for folks. They've delivered something like 3 billion in credit to millions of customers in places like Kenya, Mexico, et cetera. So this is not anything that's new. We've just been slow to get it moving in some of the markets where we're doing business today. So we've got catching up to do, where we've got infrastructure that needs to be overhauled. John, I think the CFPB even said that like at least 1 in 10 users in the United States today don't even have a credit file with one of the 3 major bureaus. So there's a lot of opportunity here. But fortunately, we're already seeing lenders and bureaus, as well as infrastructure providers, collaborate more closely together to really get a broad set of data points into these kinds of files. So this is buy now, pay later, small data loans or dollar loans, and making it real, accurate, transparent, and real time. And this is a huge thing that we're also focused on. And I'm happy that, Plaid, with the improvements that we've made across the industry with how data can be exchanged via APIs, can really start to lead the way here in driving real-time crediting and decision-making for lenders. So I'm double green on this one.
Yeah, I'm triple green on this, Ginger. If anything, I think this is too conservative, because I talked about sort of regulatory headwinds in one area. This is one where we've got regulatory tailwinds. So one of the most sort of protracted problems we've got, it's actually 41 million credit invisibles in this country, where our traditional model of credit underwriting has left millions of people behind, right? And they are systemically left out of the financial services ecosystem. And we've hit a point where technology now allows them access in a way that was way too high friction before, but that friction has been eliminated. And the regulators have seen that. 2019, you had the OCC, FDIC, CFPB, and Fed. And yes, I do exclusively speak in acronyms, and I refuse to explain any of them because it makes me sound smart. They issued guidance saying, hey, banks, you should be using alternative data for credit underwriting. It's fine, start doing it. The OCC doubled down on that last year with Project Reach. Full disclosure, Plaid is a participant along with a number of banks and other fintechs. This is a way to basically build a utility to make account and alternative data access available to any lender in the country who wants access to it. And then you've got private efforts like Prism right now, one of the new offshoots from Petal, that is making the ability to analyze that data in real time available at scale to multiple participants. And so I think there's this confluence of regulator support, consumer demand, and technological availability that's going to, in a faster period than I think we think, and that even this prediction lays out, make real-time alternative data, especially cash flow data, not just the norm, but sort of the bare minimum of what a successful lender needs to be engaged in to get the consumer through the door and get the consumer the product and experience they want, and deliver the sort of equity that regulators are going to expect in a world where we don't have those same structural barriers. So I am 3 thumbs green on this. I think this is maybe one of the most exciting things that's going to happen this year.
I'm actually going to extend one of the things you said there, John. I don't think it's just about getting more people through. I don't think it's just about kind of making the lending decisions smarter or more intelligent. I think it's also something that we'll see kind of this emergence of places that loans can be issued that they haven't been issued before. So buy now, pay later, like making a loan at the point of sale, it's been around for a long time, certainly, but it hasn't been around in as rich of a context or with as rich of data as it is now. And so you're seeing many more of these merchants issue buy now, pay later kind of loans or offer buy now, pay later loans. I actually expect that we'll start to see loans pop up in a bunch of places that we didn't previously think that it was possible, or underwriting options pop up in a bunch of those places, not all of them being loans. So I think that will be kind of something that, it's extending the prediction. It has to actually revolutionize consumer credit. So we'll see more consumer credit popping up in new places. All right, jumping to the next one. This is totally shifting gears a bit. We're going to talk briefly about climate tech and how climate tech and fintech are starting to meet. So over the past year or two, we've all seen this emergence of kind of climate-focused investing, climate-focused products, and this is wonderful on so many dimensions. But when you think about the kind of perhaps best choke point or best area to really focus efforts on climate, financial services is a big one of them. You're seeing a lot of the banks start to do things like analyze their customer portfolios, analyze their lending portfolios, and understand the climate impact of all of the loans that they are making or all of the customers that they are banking. This is one of those areas where if we're able to kind of create great products amongst financial services for those industries, those individuals that are more climate focused, more climate centric, then we can actually create kind of ripple effects changes over time. One of the banks that's obviously been the most public about it is Bank of the West, where they're doing this kind of 1% for the planet checking account. They're really front and center with this kind of thing. Lots of reasons behind all this, but I predict that we're going to start to see a lot of kind of climate tech move into fintech. I think that we're going to see more and more of both the banks themselves thinking about how they're going to bank their kind of population and how that banking that population has an impact on the climate. But also, I hope, or I suspect and hope that consumers themselves are going to start making banking decisions and spending decisions more based on kind of climate data. Anyways, suffice it to say, I think there's going to be an emerging industry of the kind of the cross section of climate tech and fintech. Oh, good. Okay. At least you can't always agree with me. You got to get some thumbs up, some thumbs down. All right. So I think that John, you're first on this one.
Yeah, I'll give I can't help but hold up anything other than green for the climate prediction, Zach. Though I will disagree with choke point. As a former government regulator, you can never say the words choke point, and I hope the one person who likes that joke in chat will give me a shout out for it because it is very niche. So what do I think this is going to look like? One, I talk to banks on a fairly regular basis. Banks who are looking at their ESG requirements and also looking at how they think about serving their customers. It's really starting to become ubiquitous that climate is a thing that has to be tracked and tracked at a fairly granular level. I talked with one bank. They are actually collecting the VIN numbers of every car whose loan they originate or securitize because they want to know the carbon footprint of that specific vehicle in order to calculate their ESG. That's an immense amount of data. And frankly, fintech and the type of data transparency and transportability that is the core of our ecosystem is going to be necessary to do that kind of stuff at scale. I also think about, my Fitbit and the fact that I never used to track the number of steps I do each day. I now track those numbers of steps every day. It feels like a very easy extension from that sort of framework to hey, I ate a cheeseburger. It shows up on my receipt and my transaction history as a cheeseburger. Someone can build the automation and intelligence on top of that to look at that cheeseburger and say, hey, John, you moron, you just had a carbon footprint that was double what you desired today. Maybe tomorrow eat a salad. So I think that that's there from a technological capacity. I know Ginger's going to say, yeah, but are people really going to care? And what I would say to that, to pre-butt her argument, is did people really care about their number of steps? No, but they're checking it. And here you also have investors who are saying you have to care about it. So I'm more bullish than I think Ginger's going to be on where this is going.
So I would love, and I don't want the response now, John, because I'm not sure what the response is going to be, but I would love to know how your steps have actually changed. Just because you're tracking them doesn't mean you're actually getting more steps. And so I want to be all green on this. I really do. I've spent a lot of time on this in past lives. I care tremendously about it. I'm just a little nervous that the more we're talking about it, it's not actually changing the way that people behave and spend money, move money, invest money. And part of this is, just there's a marketing component to this. Like I think there are plenty of companies that are tremendously dedicated to ensuring that we have good impact on climate. And for others, there's some, brand prestige associated with it. So what I'd prefer to see is that instead of talking about some of these programs, we actually just like give people different types of options. And if you think about like how energy use has been reduced in certain places, we lived in Tanzania for a while and we had to prepay all of our electricity. And when you prepay for electricity, so you move it from how you're getting paid to when you're actually paying for different services, then, and you have it on a per unit economics, but you have to prepay for it, then you can actually drive down the cost and usage of energy pretty tremendously. Even in the United States, there's like a 5 to 10% reduction in energy use for consumers that prepay. And so, I'd rather just get practical about it and start giving people the tools to have transparency into what they're using and change the cycle and timing for when their payments are actually being made, so that we can see the traditional billing cycles eradicated and people getting more proactive about how they're spending around energy. So I'm hopeful for it. I'm eager to see what's going to happen in 2022. I hope you're right, Zach. I hope you're right.
Awesome. And by the way, anyone that's involved in fintech on Twitter, you can complain about me for capitalizing the T in fintech. I was trying to make it like synchronous and look good on the other side of the heart. So you can be mad at me for that one later. Jumping to the last prediction, and I'll just remind everyone once more that we're going to do Q&A at the end. So if you want to submit your questions, go ahead. But jumping to the last prediction. So Twitter is kind of abounds with mentions. Actually, could we switch the slide here? Twitter abounds with predictions on what is going to happen in this transition from Web 2 to Web 3. And one of the things that we think a lot about at Plaid and that we talk a lot about with others is that there really needs to be some sort of kind of gradation, some sort of interim step between kind of the Web 2 driven financial services ecosystem, the Web 3 more decentralized financial services ecosystem. And what we're starting to see a lot of is that kind of not only are people needing to kind of take a lot of the foundational things that exist in the Web 2 financial services ecosystem, such as dollars, and translate them into kind of dollars on chain or kind of basically do this fiat to crypto exchange. That's a major area where we're kind of translating Web 2 to Web 3. But also, there's a bunch of these other components of the Web 2 driven financial system that are kind of crucial for Web 3. So think about things like identity validation, major area where people need to link validated identities onto the blockchain so that they can go take certain actions. I am incredibly excited about kind of Web 3 broadly, particularly a lot of the things that we're starting to see in the DeFi ecosystem and how that's rethinking some of the fundamentals of financial services. That said, I think that over the coming 12 months, there's going to be a big push to kind of create this middle ground, create this on-ramp going from the kind of current financial system to a more decentralized kind of Web3 financial system, and then maybe even back again. Anyway, I'm excited to hear your thoughts on this. Okay, Ginger, I think you're kicking us off.
Yeah, I mean, I think we're going to have this middle stage, and the past has been very dependent on centralized players. I think that we're going to see a similar formation of centralized players until we get to the full 3. And I think we're just not going to be able to get around this. And we're already starting to see it with the cash to crypto on-ramp providers, with the digital asset exchanges. The most popular ones are already starting to play those kinds of centralized roles in a way that I think folks don't want to have existing when we get to Web 3. So I think we will have this middle ground. I think my prediction, Zach, is that we're going to be here for quite some time. And be hanging out at this middle stage as it forms. And I think there's also going to be a ton of debate between the 3 of us, most likely, as well as many of the partners in the industry that we work with about what 3 even is and what does success look like when we get there. So I agree with your prediction. But John doesn't.
No, I disagree, though, not for the reason that most people who have seen my Fiat for Life chest tattoo would think, which is that I think you are underselling how here Web 2.5 already is. I mean, I seem to remember an announcement maybe in the last week or so about Plaid doing something on identity and verification. I don't know. I don't read our press clips. I don't pay that much attention unless I'm the one quoted in it. So, it might not have been what I thought it was, but the core infrastructure layer is already there, Zach. You're underselling what you've already built. And this is one where, as we think about Web3, it's not going to be Web3 and the end of financial services or Web 2. There's always going to be a parallel existence of both of them, and people are going to be moving and sort of fluidly flowing back and forth between both. And regulators, this is where I will have a little bit of fiat for life mentality. Regulators are not easily or willingly going to give up some degree of centralization and control. And that's where sort of the regulator attention to that 2.5 layer, I think, is going to increase. But the robustness of that layer and what has already been built is going to, I think, satisfy them and make them comfortable that consumers can move back and forth between those two regimes, and they will have enough visibility into it, enough understanding of it, that they're actually more willing to move in the Web3 and the blockchain and the crypto direction than they would be if we hadn't already built this. So, boss, I think, my disagreement is you forgot that you started Plaid, and that really is the core of my disagreement with you.
Well, one feedback. Calling me boss, I don't think I like that one. But anyway, I fully support your point. Obviously, Plaid, we believe that there's a lot of work that we as a company can do to help encourage this kind of Web 2 to Web 3 transition. For those of you that weren't sure what John is referencing, Plaid actually acquired a company called Cognito. We announced it last week. This is an identity verification tool, not specifically for kind of identity in crypto or identity on the blockchain, but certainly a lot of applications. And if anyone's interested in talking with us about identity solutions, identity tools and products, we would love to do that. So just ping us after the fact. I promise, though, this prediction was not just a plug for Plaid. I do think we can do a lot to help here, but this is a full industry. There are so many, millions of people working on different components of Web 2 and Web 3 that I'm just excited to see the kind of continued expansion over time. All right, so this is the end of our formal set of predictions. I think I'm going to hand it over to John to moderate some of the Q&A, also answer some of the Q&A as well. But just wanted to say thank you, everyone, for bearing with us through these. We're excited to hear your questions, and hopefully maybe we can generate a 7th, 8th, and 9th prediction while we do this Q&A. So John, I'll hand it over to you.
Awesome. Thanks, Zach. So the Super App comments were pretty spicy, probably my fault, and I should probably leave. But I'll ask one of the questions first. Do you think super apps will come from fintech or from a marketplace or other tech companies? I can take a first cut at that from a regulator perspective, but I think the business answer is more interesting, Zach or Ginger, if you want to go with it.
I'm happy to jump in. So in my view, super apps, I guess it's a hard thing to say, because super apps, when you look at the super apps that are kind of existing so I'm not sure the folks that are watching, we've got a little bit of a technical blip there, but we're back now. So the super apps that we're seeing in China, for example, they're truly super apps. They let you do almost everything in your life through this given app. I think when we think about it in financial services, it's certainly not quite as much there. So we're not seeing things like shopping. So we're not seeing this mashup of DoorDash with your banking app, with all of your shopping tools, with all of your social networks. That is not starting to happen, at least not in the US, as we see it now. I do expect that there's this kind of like rise of super banking apps or super fintech apps, where you see, obviously, we talked about Robinhood earlier launching everything. We talked about SoFi earlier launching everything. Chime launching everything. Cash App launching everything. There's so many of these others that are really launching a ton of different things. I suspect that the easiest way that this kind of like super banking app will emerge is from one of those that has a deep focus on a given segment. Call it lending, call it peer-to-peer payments, call it banking, call it something else. I suspect that that's where we'll start to see this emergence and this kind of like aggregation of more and more products into one area. That said, I could see one of the big tech players actually launching something like that too. So we talked about Amazon. Could Amazon launch a super banking app? Certainly, if they tried. Google started to build some elements of this with kind of the new Google Pay experience and kind of all the components that they have there. So could come from a lot of vectors, but I suspect it's either going to come out of the existing neo banking, neo lending, neo wealth applications, or one of the big tech players. Ginger, what do you think there?
Yeah, so I have, I think it can come from either side. I think the place that it will start, though, is where the app has solved like a deeply felt but poorly met need for someone. And that's going to be different for every app. So for Instagram, it might be like satisfying my, like the stylistic, like, consistency on those Instagram ads is like so good, right? They know me so well, and everything that I'm provided in my Instagram feed is something that I want to buy, right? So they're giving me this digital shopping experience that I don't get from other places. And so that could be a way that Meta sort of takes over my life and starts giving me other services. For Cash App, like it was the peer-to-peer sending. Like peer-to-peer sending was such a delightful experience in Cash App. And so I was a loyal user, and now I buy Bitcoin there, and I buy stocks there, and I do lots of other things with Cash App. And so what is that tip of spear that the app uses to get your loyalty? And then how do they evolve their product suite to satisfy the other needs that you have? And so it depends on you as a customer, and then what the product is that's being offered to you, and then how they can grow with you as a user. So I think it can come from either side. It's just about finding that right landing spot with the user so that you can grow with them from there.
All right, Ginger, I've got a question for you that I think you'll be really excited about, so I'm going to ask it.
Okay.
This is in the context of credit. As we go into this world of real importance of real-time data from lots of sources for consumer credit, is Plaid planning to offer other sources of data other than banks? For example, give some examples.
2 green thumbs on that one. Yeah, so this is a big area of focus for Plaid, is making sure that, just as we were talking about earlier, we're able to provide lenders with real-time nuanced information about the people that they're serving so that they can make great lending decisions. And that information, as we talked about earlier, is not just about bank statements and bank data. So what are other income streams that people have that would be relevant there? What are some of the other behaviors that exist in someone's life that would make them eligible for these kinds of services? Workforce data, payroll statements, there's all kinds of information that people can provide in order to make those decisions real-time, quick, and really fine-tuned. So yes, for sure, that is something that I'm 2 green thumbs up on in 2022, John. And I think that, although I will say, like, I think, as I mentioned earlier, again, like we've got a lot of catching up to do in North America. I just think there's so many things that we can learn from the way that these services have been provided in other markets around the world. And so getting even more creative and more nuanced about the information that folks are using to make these decisions is important. And now's the time, because we have the technology that's there. We have good collaborations with folks in the industry where these data sources are coming from. So 2022 will be a great year for credit. Zach, anything you want to add?
No, I'll plus one that. I think it's going to be interesting because there's a lot more experimentation going on in Europe and the UK, for example, versus when you look at the US. You see obviously that there's hesitations and slowness basically due to old credit reporting laws, not misintentioned regulators, just really old laws. And so that makes it difficult for people to understand where can they experiment or where will they get in trouble. John, you and I have talked about this, but I fully support anything that allows us to try more things with more openness from the regulators, creating sandbox, so on and so forth. Until we have clarity, we'll probably see more of the innovation happening outside of the US and then moving it to the US once things are known and they are more certain.
So another question for you, Zach. What does Plaid have in store for the UK fintech market and Europe generally? And what consumers and businesses there can expect from Plaid over the next 12 to 18 months?
Good question. So for those of you that aren't aware, Plaid launched in Europe and has actually had a ton of growth throughout Europe, starting in the UK, but then kind of expanding to the rest of mainland Europe throughout all of 2021, 2022. This is a major investment year. So there's a lot of things that I can talk about and a lot of things I can't talk about. So the first is just a plug here to stay tuned. We'll share news with all of you as and when we can. But broadly, as we look at Europe, we're doing a lot of expansion into new countries, new geos, new population centers, new languages, a lot of internationalization, and then trying to make sure that it all stitches together into a very seamless developer experience, very seamless consumer experience in the back end. We're making a ton of investments into a lot of the PIS products that are kind of present in that market. When we talk about this concept of shifting payment types, Yes, we mean wallets in many geos. We also mean direct bank payments in many geos, and Europe is one of those geos that, because of a big regulatory push, bank linked payments is becoming more and more popular, easier and easier. Obviously, a lot of work still to do. Things like variable recurring payments really need to get that to scale, but you can expect a big reinvestment behind that. And then from our perspective, Plaid, we see ourselves as working harmoniously with so many products out there in the fintech industry, and we want everyone to be our partner. So we're trying to find ways that we can continue to distribute this concept of PIS payments through all the channels, through all the partners that are out there. So you can see a bunch of stuff that Plaid is building directly. You can also see a lot of stuff that we are distributing through partners. And if anyone has feedback or things that they want to see us build in Europe, we are all ears. So please do let us know.
Hey, John, I'm going to step in and interrupt your Q&A flow to ask you a question, because there's one coming from the audience I think would be great for you. So I'm going to take your hat for just a sec. So someone in the audience was saying, how might changing user privacy policies impact how these tools are developed and operated?
A great question, and the first successful interruption of me in history. So congratulations on that, Ginger. So I actually think we already talked about antitrust going through a phase shift. I think privacy law and particularly consumer disclosure and awareness is going through a phase shift as well. I think there's a lot of sort of doubt on the part of regulators that terms and conditions are an effective tool for privacy at this point. And so what you see in California is the US starting to borrow, and actually now Virginia and a bunch of other states, starting to borrow from this European GDPR model, except moving even further away from the disclosure regime and starting to say, no, you can't just disclose what you're doing to the consumer. The consumer has to decide. And so what I would expect is a much higher level at a product level of consumer granular control in how their data is being used, what data is being used, and who is allowed to use it. And this is something that sort of previously has basically sat on a 30-page disclosure. Everyone in the US got very comfortable with GLBA, GLBA, or Gramm-Leach-Bliley, if I'm actually supposed to spell all this stuff out, as a way of sort of dealing with data in financial services. I don't think it's this year, but I feel like the tension on that cable is starting to get so intense that we're seeing some fraying. There's actually a hearing where the Republican and Democratic chairmen of the fintech caucus both said, hey, we don't think Gramm-Leach-Bliley really works anymore. Maybe we should get rid of it and do something new. So what I would expect is you're going to have to build in a much deeper level of granular consumer disclosure and control and affirmative opt-in, and also build in like real circuit breakers on how your products can be used and how data gets used in your product to be successful in that environment. I don't think it fundamentally limits anything that we've talked about here. What I do think is it changes the how, and it changes how engaged you need to be with your customer in navigating them through that how. Okay,
thank you. So for those of you that put in questions, this is awesome. We might butt up against time. We have a gazillion questions in there. Plus, I want to steal the mic once more and just ask these two a question to really put them in the hot seat. All right, so I made a bunch of predictions. I haven't heard any predictions that the two of you have made. So do either of you want to add your own prediction on the spot, on the fly? We didn't actually prepare for this. You're both now looking a little nervous, so this is good. All right, so either of you want to kick us off with a prediction of your own that you have for 2022? If not, I can do the teacher thing and just call on one of you.
I'll jump on the grenade first.
Yeah, John will always talk first.
Yeah,
Go ahead, John. Go ahead, John.
I know, shocked and amazed, shocked and amazed. All right, so I think this is the year for RegTech. RegTech has been sort of like this ghost on the horizon for probably 5 years now. And to explain, that's basically instead of a regulator coming in and asking for a giant box of paper on how your products and your business work and flipping through it and spending a day in a conference room, like looking at everything in an analog fashion, actually having your systems connect directly to the regulator system so that in real time, they can monitor it and monitor compliance and automate that monitoring of compliance. And I think the place that's going to happen first is AI and machine learning specifically, right? We're moving away from this sort of black box approach to machine learning and algorithms in terms of regulator tolerance. And I think we're also moving away from show us once how your AI and machine learning work. I think as regulators sort of build up the technical capacity to understand and evaluate machine learning, they're going to increasingly look for and demand the ability of a company to directly plug its model into a regulator API that monitors it and sort of evaluates consumer impact in real time. So if you are in the reg tech business, I think this is the year where you start seeing real traction and a real commitment from the regulators to build in that direction for the digital future. That's my prediction.
That was pretty good, John. So my prediction is slightly selfish because this is the area that I work on at Plaid. But I think that 2022 is the year that banks begin shifting the way that they build their products and will begin using fintech data to support better digital experiences for their users. Historically, it's been the fintechs who have been, incorporating bank data into their products and experiences. And I think this is the year that that totally shifts. And we're already starting to see the convergence of the two sides of the network from, banks not just being suppliers of information to fintech, but also being the consumers, and then fintech not just being the consumers, but also being, providers into the fintech ecosystem. And that's been happening over the course of the last 12 months. But this is the year that I think it just completely shifts. It will no longer be the example or the anomaly that I call out to justify this multi-sided network, but it will be the way that banks are building products. So that's my prediction for 2022.
All right, so Ginger, I'm envisioning this like if we put this in a meme, it's the "I am the captain now" meme, except the banks are saying "I am the fintech now." Yes, okay, great. I'm glad that one works. All right, I'm going to close this up on that note. Thank you all for being here. Thank you all for listening. Thank you for joining. There's a zillion questions that we didn't get to answer. If you want to ask us any more questions, please feel free to do so, or please feel free to ping your Plaid contacts, and we'll try to get you answers to those. Thanks to all of you that made this chat really quite fire the entire time. It was very fun to watch all the comments going through. We love it. We'll be back next year with more fintech predictions. Again, thank you all for being here. This was really great. Ginger, John, thank you for doing this with me. I realize I put you on the spot in a way that you didn't quite expect some of the time. So thank you for doing this with me.
No different than every day, Zach.
Yeah, I know. This was fun. Thanks, everybody.
Thanks, everyone. Great talk.